So this speed learning, the topic is anti-money laundering. And as for the context, we are going to focus on three main parts. So first, we will have a part about money laundering. So what is money laundering, types of money laundering, stages of money laundering. Then the second part would be on anti-money laundering. Okay, so just a high-level introduction to anti-money laundering and counter-terrorist financing. And the third part will be on AML software. Okay, so anti-money laundering software that is used by financial institutions. Okay, so we will have an introduction to the software, types of AML software, non-compliance in terms of AML, and top AML software providers. So starting with the first part, money laundering. So what is money laundering? Money laundering is the process of disguising the proceeds of crime and integrating it into the legitimate financial system. Before this proceeds of crime, so the money that comes from crime, are laundering, it's problematic for the criminals to actually use it, okay, because they cannot explain where it came from. And well, it's easier to trace it back to the crime. After being laundered, it becomes difficult to distinguish money from legitimate financial resources, and the funds can be used by the criminals without detection. The amount of money laundered globally in 1 year is believed to be between 2 and 5 of the global GDP. So between 800 billion and $2 trillion. And this is a low estimate, since it's pretty difficult to actually properly estimate the amount of money laundered. Money laundering is frequently associated with illegal arms sales, smuggling, embezzlement, insider trading, bribery, and computer fraud schemes. It's also widespread in organized crimes such as human trafficking, weapons or drug trafficking, and prostitution rings. Okay, so this is like a high-level explanation of what the money laundering is. And as for the types of money laundering, so we have two types. So stealth laundering, which means that the criminal organization tries to hide the illicit origins of the proceeds of trafficking by laundering the money itself, okay? Or professional money laundering, when financial professionals acting as an autonomous structured group specialize in providing advice or services to launder money for criminals or transnational organized crime groups. So how do criminals launder money? Commonly, there are 3 stages of money laundering process: placement, layering, and integration. So first of all, we have the crime, which generates the dirty money. And afterwards, we have the placement. The objective is to introduce the illegal funds into the financial system. So for example, smurfing, which means to divide large amounts of cash into less suspicious, smaller amounts, which can then be deposited into a single bank account or several bank accounts. False invoicing, over-invoicing or pseudo-invoicing, so fake invoicing for payments of non-existing goods or services, buying foreign currency, buying securities or insurance with cash, gambling and betting on sport events. The second process is layering. So after the money was placed, okay, layering, the objective of layering is to disguise the illicit nature of funds by concealing its origin. Okay, so examples of these are transferring funds between countries. So when you transfer the funds between, several countries, for example, it will be harder to track it back to the source. Moving funds between several banks, moving funds between multiple accounts within institution, chain hopping, which is converting one cryptocurrency to another and moving cryptocurrency from one blockchain to another, utilizing offshore bank accounts or investing in properties or businesses in foreign countries. And the last step of the money laundering process is integration. So the objective is to create an alleged legal origin for illicit funds and use them. So examples, investing in legitimate business ventures. So after the money was layered, okay, was moved around the world, around multiple banks, around multiple accounts, and so on. So after this part, then we can take those money and then invest it into legitimate business or buying real estate or other luxurious items, shell companies. So the creation of complex corporate structures helps in concealing the origins of illicit funds during the integration stage. Digital currencies, which allow criminals to integrate illegal funds and further complicate tracking efforts using financial products or instruments, and trade-based money laundering. So this is either over-invoicing or under-invoicing for their legitimate business to move and mix the illegal proceeds across borders. With commercial transaction-related documentation at the base, the dirty funds change hands and bank accounts without suspicion. So these are basically the three main processes of the money laundering. Do you have any questions? Okay, then I'll proceed to the next step. The second part, so we will be discussing about anti-money laundering. So what are anti-money laundering, AML, and counter-terrorist financing, CTF? Money laundering and related underlying crimes, as well as terrorist financing, are crimes that have economic effects. They can threaten the integrity and stability of a country's financial sector and the country's external stability, more generally said. In an increasingly interconnected world, the harm done by these crimes is global, affecting the integrity of the international financial system. Anti-money laundering and counter-terrorist financing policies and measures are designed to prevent and combat these crimes and are essential to protect the stability of the global financial system. So at the country level, AML CTF measures include the laws and regulations that are enacted to prevent criminals from laundering and financing terrorism, or if they manage to launder or finance terrorists, to prosecute them in court. For a reporting institution, AML CTF measures refer to systems or programs known as AML CTF compliance program, designed to assist the institution in preventing themselves from being misused by criminals seeking to launder money through their businesses. An AML CTF compliance program will cover many areas that help prevent and detect such abuse. The compliance program will enable institutions to report potential money laundering or terrorist financing activities to the authorities. Collectively, these measures are called preventive measures, and the institutions which are designed by law to conduct these measures are called reporting institutions. Which leads us to the third part, which is about AML software. What is an AML software? Staying compliant with AML regulations is quite a massive challenge. Manual compliance methods are slow, prone to errors, and resource intensive. So in order to avoid this process, AML software automates core compliance tasks, ensuring that organizations remain compliant with minimal effort. It's an advanced tool designed to monitor, detect, and report money laundering, terrorist financing, and other financial crimes. AML software is used by banks, financial institutions, fintechs, money service businesses, insurance companies, and other regulated organizations that are responsible for mitigating the risk posed by financial crimes. So how does an AML software work? AML software uses a variety of techniques such as data analytics, artificial intelligence, and machine learning algorithms in order to analyze large volumes of data and identify potential suspicious transactions or parties. The solution should be able to ingest data from third-party sources, including lists compiled by the government. It should also allow for automated screening and monitoring related to adverse media screening, as well as identification of politically exposed persons. When the AML solution detects a suspicious activity, a SAR, which is a suspicious activity report, will be submitted. The AML software should seamlessly collate and produce relevant data to support the preparation and submission of the report. Furthermore, AML software should support the production of detailed reporting designed to provide regulators with a credible and defensible view of the organization's compliance efforts to date. Types of AML software. Different types of anti-money laundering software exist to address various AML compliance needs. Typically, they focus on three aspects: customer screening, transaction screening, and ongoing monitoring. So we have AML screening, okay, KYC and KYB verification, transaction monitoring, and risk assessment. And we will be going through each of them separately. So, AML screening. This type of AML software screens individuals or entities on sanctions lists, PEPs, politically exposed persons lists, and other global wanted lists. And just to mention, the politically exposed persons refer to persons which have high status and are prone to taking bribery or perhaps corruption. These groups are considered high-risk customers and have their own lists due to an elevated risk of money laundering and potential links to financial crimes like bribery and corruption. Automated AML screening software maintains a high-risk database for money laundering and financial crimes, comparing the new customers or transaction data to alert users of any matches. Okay, so basically, if the customer it's on one of these lists, it means that there is a higher risk for potential money laundering. KYC, KYB. KYC, also known as Know Your Customer, and KYB, Know Your Business. KYC, KYB software verifies the identity of individuals and corporate customers. The information collected and checked includes name, address, date of birth, and government-issued identification. KYB verification extends to confirming the identities of individuals linked to the screened companies. This involves gathering data such as government reports, tax records, or financial statements to assess the legitimacy of businesses seeking services. The data is then used to identify and flag high-risk customers and suspicious transactions. KYC KYB verification is typically initiated during customer onboarding and persists throughout the entire business relationship. So basically, it's very important to know your customer or your business in order to make sure that any high-risk clients are identified and easily flagged. And the transactions that they do are monitored strictly. Types of AML software. So, So I mean transaction monitoring. So it's the next type of AML software that we will be discussing. So automated transaction monitoring software can screen and review transactions in real time, It flags suspicious transactions that potentially indicate financial crimes, such as money laundering. The transaction monitoring process includes 8 key steps. So, identification of suspicious behavior. So this part includes setting parameters for identifying potentially illicit activities. This can include setting rule based on transaction amounts, frequency, or geographic location. To give you an example, one rule could be, to flag transfers to or from high-risk countries, okay, over a certain threshold. This is a model that, for example, we used at BNP. Of course, there is quite a long list of models that is used. This is just one of the most simple one, but I just wanted to give you an example. So this is the first step. The second step, setting alerts. Creation of automated alerts based on predefined criteria, rules, and parameters. Okay, so whenever a transaction is flagged as suspicious, it will generate an automated alert, which would need to be checked and verified by the users. Next step, customer identification. Identifying and verifying customer information such as name, address, and identification documents. Transaction analysis. Analysis of individual transactions, including the amount, origin, and destination. Investigation and escalation. So after an alert is generated, they are investigated and any suspicious activities are escalated to the appropriate parties. This may include the financial institution's compliance team or law enforcement authorities, depending on the situation. The next step will be reporting. As the law requires, financial institutions must report suspicious activity to the relevant regulatory authorities. Failure to do so can result in severe financial penalties and reputational damage. Review. The review is the ongoing evaluation of the effectiveness of the transaction monitoring software. This includes reviewing the parameters and alerts to ensure that they are still relevant and reviewing any false positives or negatives to identify areas of improvement. And the last step will be the audit. Financial institutions must establish a clear audit trail for monitoring and investigation. This helps demonstrate compliance with regulatory requirements and aids in identifying any potential gaps in the transaction monitoring process. So, do you have any questions? Then I'll move on to the next section. Sorry about that. Common scenarios that are often employed in AML systems include. So basically here, I'm just going to give a few examples of the rules based on which a transaction can be identified as suspicious. So high-risk jurisdiction transactions. So frequent transfers to or from high-risk countries. Countries with a history of money laundering activities, weak AML laws, or political instability. So for example, Iran, Pakistan, North Korea, Venezuela. So basically, any transaction to or from high-risk countries will have an increased risk of money laundering and needs more strict monitoring. Large transfer to offshore accounts. Offshore financial centers offer secrecy and may have less stringent regulations, which means that they should be more strictly monitored. Unusual transaction patterns. So here we have a couple of examples. So rapid movement of funds, multiple transfers within a short period with no apparent business justification, inconsistent transaction amounts, deposits and withdrawals that significantly deviate from the customer's usual activity or don't align with their business model, structuring or smurfing, multiple small deposits, so basically breaking down large sums into smaller deposits, often just below the reporting thresholds. Okay, so if they are below the reporting thresholds, they would not be considered as suspicious, which is why they do the breaking. Because if they were to deposit the large amount, it would be over the threshold and considered as suspicious. Okay, and it will be then investigated. Frequent cash transactions, multiple cash deposits or withdrawals just below the reporting threshold spread across different branches or accounts to avoid detection. Sudden changes in account activity. So, for example, if a dormant account suddenly becomes active, so accounts with little or no priority activity showing a sudden increase in transactions, it can be suspicious. Spikes in transaction volume, a sudden and unexplained increase in the number or value of transactions within a short period. High-value transactions, so large cash transactions, single or multiple large cash deposits or withdrawals exceeding what's typical for the account and industry. Unusually high transfers, large electronic transfers that are inconsistent with the customer's past transactions or business activity. And the account holder behavior. Multiple accounts under one name, one individual holding an unusually high number of accounts and conducting transactions frequently between them. And frequent cross-border transfers, regular international transfers that do not align with the customer business. For example, a local bakery making frequent transfers to high-risk countries. It doesn't really make sense, so it might be a suspicious activity. These are some of the basic rules, that are used for monitoring suspicious activities. Of course, there can be a lot more, and these are quite standard. There can be also some that are specifically designed for each financial institution, so customized. Okay, some key challenges associated with using AML monitoring scenarios. So the appearance of false positives. Okay, so the appearance of false positives. AML scenarios can trigger alerts on legitimate business transactions or overwhelming compliance teams with investigations and wasting resources. This can lead to alert fatigue, where analysts become less attentive to genuine red flags. Okay, so it is possible that the rules, the ones that I gave as an example before, they are quite general, and of course it's possible that besides the suspicious transactions, it might also generate some false positives. So basically generate alerts for transactions that are not actually suspicious. Okay, so this is what it's false positive. Scenario tuning. Okay, so starting the scenario tuning is actually used in order to, try to minimize the false positives that are mentioned before. So basically striking the right balance between catching suspicious activities and avoiding false positives requires ongoing effort. Scenarios need to be constantly adjusted based on new typologies, emerging threats, and changes in customer behavior. Another key is the data quality and availability. The effectiveness of an AML scenario heavily relies on the quality and completeness of the data being monitored. Inconsistent or missing data can lead to inaccurate alerts or hinder investigations. Regulatory scrutiny. Balancing efficiency with regulatory compliance is crucial. Overly relaxed scenarios that miss suspicious activity can lead to penalties from regulators. However, excessive tuning to eliminate false positives might also raise red flags with regulators if it seems to be hindering detection of actual money laundering. So it's very important to find a balance between the two. Resource constraints. Implementing and maintaining effective AML monitoring requires a significant investment in technology, skilled personnel, and ongoing training. Smaller institutions may struggle to keep pace with the evolving landscape. And the last key challenge here is the evolving techniques. Money launderers constantly develop new methods to circumvent AML controls. Scenarios need to be adaptable to keep up with these evolving threats. The next type of anti-money laundering software is risk assessment. AML software uses built-in risk assessment tools to identify and automatically check potential risk linked to customers, products, services, and transactions. Some advanced features for AML risk assessment typically include assigning risk scores for customers and entities based on factors like customer type, location, PEPs, politically exposed person lists, and sanctions screening. Regularly updating customer information and externally sourced details is crucial for accurate risk assessment. Regularly updating the customer information, yes, so crucial for risk assessment, already mentioned that. So that's why automated risk assessments using AML software should rely on real-time updates of risk profiles, such as continuous monitoring activities. Consequences of non-compliance in terms of AML. Typically, financial institutions are fined or penalized for AML failings based on inadequacies in their AML framework, governance, and policies. If AML requirements are not followed, penalties can be severe and prison time may be imposed. Businesses all over the world suffer reputational damage and harsh penalties as a result of insufficient AML compliance each year. Some of the most notorious examples of fines regarding non-compliance with AML measures include Deutsche Bank, which was fined $630 million in 2017 for AML failures related to Danske Bank for a major money laundering scandal. JP Morgan Chase, which was fined $1.7 billion in 2014 for AML failures linked to the Bernie Madoff Ponzi scheme. HSBC, which was fined $1.9 billion in 2012 due to non-compliance for helping Mexican drug cartels to launder money. Capital One fined $390 million for failing to report thousands of suspicious activity reports on time between 2008 and 2014. BitMEX, which was fined $100 million after falling short of anti-money laundering standards and engaging in cryptocurrency trading without regulatory authorization. And 26, which was fined $5 million for failing to report a high number of SARS on time between 2019 and 2020. So it's very important for financial institutions to actually be up to date with their AML and compliance programs Okay. Otherwise, you can see that there have been a lot of cases where they have been penalized, and it really brings damage to their reputation as well. These are only a few cases. There are a lot more, of course. Moving on to the last part. So I've listed here the top 10 anti-money laundering software providers. Now, it's important to know that most of these providers, they offer softwares that are quite similar in what they actually do. So basically, what they do is they will have a part for KYC, so know your client, and know your business verification. Okay, transaction monitoring in real life, so basically monitoring the transactions of the bank or whatever financial institution it is. Okay, reporting. Okay, so basically a part about reporting the suspicious activity reports to the reporting institutions. And the top 10 anti-money laundering providers are ComplyCube, Dow Jones Risk and Compliance, NIS Actimize. NIS Actimize is actually the software that I used while working at BNP. So this is the anti-money laundering software that BNP uses. Ondato, Oracle, Refinitiv, Sanction Scanner, SAS, SumSub, and Tetare. Like mentioned, I won't be going through, all the little notes here for each one, because what they do is pretty much, they have very similar services that they provide. So, do you have any questions for me? Or notes? Well, then this was all for my presentation. Okay. If you have any feedback or if you would want to know more about any part that was mentioned here, let me know. And thank you for your time today.
Miruna, Maria a une question. Pierre a une question pour toi.
Oui, dis-moi.
Oui, bonjour Miruna, merci pour ta présentation, c'était très intéressant. Moi, j'ai une question par rapport à... en fait, c'est quoi approximativement...
En anglais, la question, s'il te plaît.
Yes. How much is approximately the reporting threshold? You talked about it earlier. You said that there is a minimum amount that you where you can do money laundering without noticing.
Okay. Well, actually, the thresholds kind of depend. Okay, so it depends on the rule that was used. Okay, and also, the bank itself. So basically, the compliance team, what they do is they look over the information, so the transaction history. Like at least I can tell you what they do in BNP, right? So yes. What they do is around every 2 years they do fine tuning. Okay, so basically what they do is they look over the transactions volume and value over a certain period, usually the last year. Okay,
yeah.
And basically based on that information they come up with the thresholds for each rule. Okay, so basically each of the rules that are defined, so each of the models, okay, that generate alerts will have its own information and thresholds that is used. Okay, and this is basically the internal compliance team of the bank, which comes up with this information. Then they provide these parameters to us, okay, the ones that are in charge of the software, and we load it, okay, in the system, and basically the alerts will be generated based on the new parameters and thresholds.
Okay, so basically each bank has its own parameters based on how much it's big, how much or the amount of the transactions.
Yes, exactly. So
Okay.
it's very important to, like, of course, each bank will have its own transactions. Some banks are bigger, some banks are smaller. So you don't have a threshold that will be applied everywhere. It depends basically on the activity of the bank. Of course, let's say probably that's the regulatory. So the regulators at country level, they will probably define, like a minimal threshold. But then, of course, each financial institution, based on its own activity, it will properly
Adjust,
try to define,
yes,
and adjust their own threshold based on their activity.
Okay, thank you.
You're welcome. Autre question?
Yes, Miruna. Hi. Thank you very much for the speed learning, Miruna. I have a question. I know that for now in the banking industry, we have many projects now using machine learning to fight money laundering. So my question is, why do we use machine learning models compared to the traditional rule engine for fighting anti-money laundering?
Well, of course, standard machine learning, it's more interesting to use because basically it learns based on previous activity. Okay, so it can adjust in real time, the rules based on actual scenarios and actual cases versus very standard and rules which they will not keep up with the trend. Machine learning is basically the system kind of learns by itself based on the scenarios that the banks have and the actual situation and cases. Okay, so of course it's more useful in order to keep up with emergent threats. So like I mentioned in the presentation, money launderers, they kind of come up every day with new methods. Okay, so it's important to keep up with the new threats. Okay, so of course machine learning will be more useful than standard, very static rules defined a long time ago, which may not be applicable to today's money laundering.
Okay, and the solution, a market solution like Actimize can do machine learning, or do we have to develop additional tool for that?
Well, I wasn't involved very much in that part. Okay, so to be honest, I don't know quite a lot of information on the machine learning part. We use the software, but I didn't develop the software.
Okay. All right. Thank you very much, Miruna.
Sorry, I can't give more information, but if you want, I can try to find out. Anything else? Okay, then like I mentioned, if you are interested in having a more, if you are interested in something that I did not cover today in my AML presentation, or if you want more details about any of the topics that were presented, then just let me know. Thank you so much for your time today, and have a great rest of the day.